Deep Dive with David Stendhal, where we trade without ego, no emotion, no greed, and no opinion. Before we begin tonight's video blog, please read over our trading disclaimer and remember to trade smart and accept the reality that trading futures is risky. This presentation does not provide buy-sell recommendations, and our information is strictly provided for educational purposes only. As always, trade at your own risk and analysis. Hey, it's David Stendhal with tonight's Deep Dive. It is May 15th, 2018. Given the sell-off in the equity markets, I thought I would take a look at the S&P 500 with the ETF being SPY. Got a mixed bag here when it comes to the trends to the market, but the technicals are still positive. And nothing's really showing up here on any of the elastic level, the wave level, the power level, support resistance levels for the most part. But I want to go into a little more clarity and go into a little more detail here. Second thing I'm going to show, at least for right now, there's nothing that's showing up on an end of day basis, which is what this data is about when it comes to our pro alerts. And this being the S&P, it's all blank. However, if we look at the market, right through here, you'll see that yesterday we had a foreshadowing of the market getting a little bit overbought and selling off, and this in our elastic level indicator. Now the honesty around this one is that it can get into overbought territory, and it's a precursor to something where you want to pay attention, but there are better indicators that we have that will give us an idea that the market's truly starting to fall over and really start to sell off. The market for the most part is just slightly overbought, but it's not overbought in such a territory that it's looking for a major reversal. So here's today's bar on an end of day basis right through here. We're obviously above the 50-day moving average, and if we come back through this support level right now, the low of the day is essentially hitting that particular support level. So even if we break it theoretically tomorrow, this support level, come down, maybe touch the 50-day moving average and meander for the next couple of days, and then start to head back up to the 2800 level. That wouldn't surprise me for the most part. But on an intraday basis, we're looking at things a little bit differently, and we can look at how could we have known that the market was likely to do some type of a reversal. Well, first, on an end of day basis, it was and did trigger an indicator here that said, hey, you should be watching the market on an end of day basis. If we take a look at things on an intraday basis, here are two systems. One's a 120-minute bar, and the other one is a 90-minute bar. So the upper is 120. This is the Rigel system. The 90-minute bar system is the Aldebaran system, Aldeb, and that is a 90-minute. You can see that they both got into trades around the same time, back on May 4th, and this one right here on May 4th. They both had similar exit routines. Again, 190, 120 minutes, so they're very similar in their chart makeup. And you can see that we also had three conditions here that when the market really started to rally, in fact, what I'll do is I'll just bring this up a little bit so we can see it a little more clearly. When the market started to really rally here, we had three set conditions on both charts, three up here, three down here. And what this is the doubt high indicator. And it was giving us a clue that the market might actually start to turn over. Now, I mentioned that we had the little dot on the screen on an end of day basis, the elastic level. Well, when you get confirmation here with three or so of these alerts, it tells you that the market might start to sell off, as well as it did. So we actually did pretty well in these trades. Again, these established themselves on May 4th, obviously liquidated this morning. In fact, if I flip back to the website, you'll see that we've got a mixed bag here. We've got two long and one short, so we're net long one system. Got a nice open profit here. And if we look at the exit signals today, here's the Aldebaran 90 and the Rigel 120, and they both liquidated this morning. One at 7:30 in the morning, the other one at 8 o'clock in the morning. And in both instances, they both made around 40. What is it? We'll call it 4,400 each. One was 43.90, the other one was 44.05. So basically 4,400 each. So it was a nice profit to have been made with these two particular positions. And the reason I'm showing these off is because when I start showing these things on an end of day basis, that doesn't necessarily mean that these conditions are not giving us a more clear indication as to what's happening on an intraday basis. So when you start to get these little intraday thrusts, and we have the what we'll term as the doubt high, it's giving us an indication that our systems, if and we were long, might be liquidating themselves here fairly quickly. So what's going to take place here? Obviously, both systems have liquidated themselves, but as I showed here just a second ago, is that we still have a long daily, a long 90-minute for Betelgeuse, and then an Aldebaran 120 short. And these obviously have established themselves at different times. Here's another one that's still long as of May 4th. And you can see that it was up $4,000. The other two systems have triggered at different times. And so what we'd be looking for is a bit of a retracement in the market and putting ourselves in a position that we might be able to reestablish some long positions. We've got a slight hedge, obviously 2 long, 1 short, and with the market starting to sell off, let's see what happens at this support level, and let's see also what takes place at this 200, or excuse me, the 50-day moving average, and see as we're out the market can actually find ourselves in a position that the market actually finds some support. I would be looking for some type of a condition where it kind of sells off a little bit and then meanders and then starts to retrace back up to these higher levels here, the 2800 level in the S&P 500. The markets for the most part aren't dramatically overbought, and they haven't been overbought in a while, so I think that there's still room for us to, once we have a little bit of a retracement, today being part of that retracement, we can regroup and start to head higher, and then that means obviously that our systems will put ourselves in a position that, as I mentioned, we've got 2 long, 1 short. We'll, maybe make a little bit of money on that short position, give back a little bit of money on those long positions, and then be able to reestablish some more long positions. But let's see how things kind of play out here. As of now, with the market having gotten into slight overbought territory yesterday, with according to this dot here on the elastic level, and what I showed on the intraday basis with those doubt highs on the 90-minute and the 120-minute bars, that there was, clear indication that the market was looking for a little bit of a retracement and look for opportunities to take profits, and that's exactly what those doubt high indicators are all about. In fact, I'll just come back here to the website and just kind of show you that these are on end of day basis, these profit taking, but the doubts, what they represent are profit taking opportunities. So when we had that type of a condition, you always wait for the system to liquidate its entire position. I'm going to flip back here so you can see it. You're going to wait for the system to liquidate itself in its entirety, but there are going to be opportunities that if you trade multiple contracts, as I hope that you do, then in that particular instance, there was ample opportunity on both of these charts, the 120-minute and the 90-minute. There was ample time to take a little more and a little more and a little more off the table so that we didn't have to wait to take the entire position off here. But it should at least be viewed as a foreshadowing that we're going to probably be close to wanting to take to liquidate our positions. That's based on the systematic approach, but even if you're just simply trading on your own, it should foreshadow that you should be looking at things very, very carefully and looking for opportunities to unwind part of your position. That's what these magenta crosshairs, these little plus signs represent. And if you were trading on an intraday basis, as these systems were 90 and 120, you would have been able to see those profit-taking opportunities pop up on both time frames. Obviously, they're pretty similar, but you would have at least seen them in three conditions on the 90 and 3 conditions on the 120. So we'll see how things kind of play out here with the little retracement that we're seeing, and then in hopes that we can unwind that short position and establish a few more long positions. But I would encourage you to just simply watch the systems and see where things kind of go from there. So thanks for watching. We'll look at another market tomorrow. Bye-bye.